All right, next, so defining the dollar risk. Now we get into position sizing. Position sizing is actually relatively simple. Position sizing is simply taking the difference between what we just defined, the dollar risk, and dividing that by your stop loss. And that gives you the proper share size. So what's kind of cool about this is it doesn't matter if you're trading a $10 stock or a $500 stock. You're still only risking the same dollar amount per trade. Think about that. You're never going to risk more per dollar because you've already defined how much you're willing to risk on the idea. Now what you're actually looking to do is how many shares do I need to trade? If I want to risk, I'll just throw a number out there. If I want to risk $200 per trade and my stop loss is $1 away, well, that's 200 shares. It's really that simple. If you want to risk $200 and your stop loss is $2 away, obviously it's different share size now. So you divide that to become proficient in understanding the share size. And that's kind of cool because you've already understood that you're accepting the dollar amount, you have a stop loss on the trade, and now you just take those two numbers and that gives you the share size, which kind of really takes all the confusion about how many shares should you have, because those first two parts of the prep work are literally giving you the amount of shares based on what you've already accepted on the trade. So that's actually kind of an easy part. We're going to move on from that one right now. So position sizing. Next, we're going to talk about order flow. We get tons and tons of questions about order flow. And